Welcome to Beyond the Press Release, a production of Gorecom, in which we take the time to speak with small cap executives after they put out important news. And with us again, he's back because he's put out great news. Shafin Diamond, CEO, Victory Square Technologies, trades on the CSE under VST. For our friends in the US, VSQTF, and for our friends in Europe on Frankfurt under 6F6. What can I tell you about this company? The press release that we're talking about, Victory Square reports record fifth consecutive quarter with positive net income and earnings per share. That's unbelievable. Today, GameOn Entertainment, when public started trading, that happens. For those of you new to the story, this is all you need to know. Our thesis is that this decade is going to create 3 times more wealth than the last 3 decades combined with respect to disruptive technologies. And that's what Victory Square is essentially doing. They're an investor, an accelerator, into companies, and they give you, the investor, an access to a basket of the best startups with maximum growth potential, because you may not have the time or the aptitude to figure out what are the best up-and-coming AI companies, augmented reality, gaming, telemedicine, you name it. Victory Square does the work for you. Today's press release proves they know what they're doing. Shafin, get in that last sip because you have a lot to say. Welcome to the show, buddy.
Thanks for having me, George. Really appreciate it.
Well, first of all, let's talk about this latest press release. Victory Square reports record 5th consecutive quarter with positive net income and earnings per share. If you're a widget company and you finally got into your groove and you're into your growth phase, okay, that would be a great accomplishment, but that's what you're expected to do. But how big is it, the fact that Victory Square is essentially an investor accelerator? That means there's a lot of stops and starts, a lot of chunkiness to have this kind of consistency. How great is that, man?
No, it's great, and I think it's key though, because it didn't happen overnight. That start and stop period. I think we've talked about this before. We have this kind of 12 to 36 month window where we plant seeds, water them, provide them with love and care, and then they start to harvest. And I think last year we started to see that. And since then, again, 5 consecutive quarters as these companies start to harvest, they're starting to unlock value for VST. So not only that consistency, but the fact that it didn't happen overnight. This was a process that started 36, 48 months ago, but we've hit an inflection point. And so now the flywheel's in motion. GameOn, like you just mentioned, first public, started trading today. Thank you again for all the share owners for their support. Had a solid trading day, and Immersive is up next, and again continued with portfolio companies coming out. So I think this is something that investors can expect to see.
I know you're a humble guy, so you've never been the guy that thump your chest, pat your back. But I've got to ask you from just a strictly professional point of view, right? Is this validation of and I mean you and the team, okay? I always want to make sure I get that clear, but is this a validation of your investing acumen? Because there are a lot of people who want to try and invest in a basket of up and coming technology companies. Sounds exciting, sounds explosive, could make a lot of money. But the fact of the matter is it's very difficult to find who are the great AI, AR, online gaming companies. Talk to me about the validation of your investing acumen, as humble as you want to be, but is this validation that you guys have a great formula?
Yeah, absolutely. So we knew that when we started the process, everything we were saying was just words. And so in order to turn those words into actions, and we needed to execute. And I think that with Fans Unite last year and GameOn this year, they're examples or validation, of that model. Of this foundation to have access to 80 accelerators around the world, to be able to find those needles in a haystack, to be able to work with them, assemble, time, knowledge, and money and thought leadership around those businesses to nurture and grow them, and then to eventually spin them off. So absolutely, I think, we're excited as a team that this is another validation, not just with Fans or GameOn, but also, the 5 consecutive quarters.
Yeah.
But some of the bigger things for us were like the share dividend. It wasn't enough for us to validate that we could find these needles in a haystack, grow and build them, spin them out, unlock value for VST and VST share owners, but also to reward our share owners. That share dividend is a big deal. Like, I don't know.
12.5%, I believe. You had 12.5% of GameOn got dividend out to the shareholders.
Yeah, I don't know the exact percentage, but I think it was
Something
around
like that ballpark. Yeah,
yeah,
12.75, something like that.
Of the parent company, got distributed out. And again, I don't know many small cap or micro cap companies that pay dividends, but that's one of, we've already approved the second one with Immersive. But again, that was something very important for us. So not just to show that we can consistently deliver positive net income and earnings per share, do what we say we're going to do, validate that we're good allocators of capital, validate our foundation, and all the things that we talked about over the last 2 to 3 years. But more importantly, just rewarding share owners. Like, to me, that was like the biggest thing that we were as a team most excited about. However, having said all of that, we still operate on a day one mindset. So
Oh yeah. I don't think you got your eye. I don't think you guys are taking victory laps. Pardon the pun to your name, Victory Square. But yeah. I would assume you guys are just saying, okay, this works. Let's keep it going, guys.
Absolutely. And again, I think momentum. Head down, execute. We all, everyone here at Victory Square loves what they do. We work really well as a team. You and I are talking about, sports and the analogy of the right players and the team and chemistry and strategy. And I think we have that. So I think everyone is excited. We're happy about, GameOn going public and being great for all of our share owners and GameOn share owners. But back to work. It's on to the next.
And speaking of back to work, let's celebrate. We talked about GameOn $get GET. So congratulations on that, and congratulations to all the shareholders, right? Because they all got shares as a result of that. What are your now that it's trading, now that it's on the market, what are your long-term prospects, your long-term thoughts about GameOn and what you think they're going to be able to accomplish? Because they've already got, and by the way, maybe give a 30-second overview for people at home, just a quick one who don't know about GameOn yet, and then talk about the long-term prospects and where you think it's going.
Yeah. So, I mean, with respect to GameOn, I think, GameOn started off by building, tools and technologies around making static content more social. So as they were looking at, streaming sites like Twitch or OTT platforms like Netflix and Hulu and Disney popping up, there's a lot of cord cutting happening. Advertisers were having a hard time and putting pressure on cable operators and content producers to find new ways to integrate ads into content. So what Matt and his team had originally done was build the GameOn app that made that static experience more social, created a co-viewing experience for that, allowed advertisers to advertise and integrate that into the experience that you're watching. And that was phase one. And they grew that considerably, had really good tier A partners. And I know you talked to Matt on Friday and the video dropped today, but I think he gave some snippets on some of the really interesting things that they're building on a go-forward basis. And those things that they're building them because they've got great partners from a cable operation perspective, so distribution, great content partners. They've got capital to be able to reinvest, but there are a couple of really key additions that they made to their team that are really going to help propel GameOn's existing business, their B2B business, plus really help them with some M&A opportunities. And that's, their chief of product officer, Santi, created NBA Top Shop, Dapper Labs. He was with, building FIFA at EA Sports for 10 years. So
you've got guy to have, unbelievable.
Yeah, phenomenal product guy to have. And then, you look at their board from Jay Moses and his experience at Take-Two Interactive, Liz, who was, used to head a business for Apple News. And so you've got a lot of really, really good people there and a first mover advantage in capital to kind of grow and scale that. So we're excited about GameOn from a VST perspective. Having it spun out is going to unlock considerable value for us. It's going to give us something that, an asset that's liquid and tradable. Should we see, want to take money off the table to reinvest and compound our growth here at Victory Square. It validates our business model. But Just taking a step back from VST's perspective, when we started the year, and you kind of talked about our fifth consecutive quarter, there are really kind of 5 goals that we had when the year kind of kicked off, and one was for us at Victory Square to maintain a healthy balance sheet and be in a really strong financial position. So again, positive net income, earnings per share, cash in the bank, strong assets. That was a big milestone for us, and we've achieved that. The second was, like I mentioned, we wanted to give a dividend to our share owners. Spinning that off and having in GameOn, and I think the dividend was given out at 35-cent share cost base. I think we closed at 74 on day one. So great reward for our share owners, where we're telling them, hey, not just saying we're going to do something, but we actually execute and do it and deliver. Completing the acquisition of Hydreight, which we did, which is our beast in the telehealth space. We launched DiscreetCare last week, and again we approved another share dividend for Immersive. So we're excited about GameOn, but we're more excited about the fact that when we started the year, we've already knocked off 5 big major milestones that we kind of set forth to
and
do
we're not
already.
even halfway through the year, and you guys are heading out of the park already.
Yeah.
You've got 24. You got 24. Is it 24 companies in the portfolio now? How large do you want to grow it? Is there an ideal number? Because at the end of the day, it is a finite resource, right? You can invest in just about anything, but Victory Square now has proven that it wants to invest in quality. It's got all the ingredients that make it a Victory Square investment. How large do you want to grow that portfolio, and what's realistic in going forward?
So, it's a good question. Our focus right now, we mentioned the 24 plus portfolio companies overall, but there are select companies that we're hyper focused on. Right now, we're very focused on the companies that we believe we can get that alpha for our share owners now. So, companies like GameOn, companies like FanTonight, companies like Immersive, companies like Hydreight. So for us, the next 12 months are going to be hyper focused on a select few companies where everything is lined up to our objectives, and that's what we're going to to go deeper in and get that alpha for our share owners.
So do you think you're more in a phase of, all right, we've got a great crop, let's execute a few that we really like, so more execution and get them to market, as opposed to not that you're going to stop finding new ones, but maybe more emphasis on let's get these 3, 4, 5 companies to market faster?
Yeah, I mean, we've got this amazing produce. The market wants it. We want to bring it to market and sell that. But we've also planted seeds back at the farm that I think are going to continue to harvest maybe Q3, Q4, Q1 of next year, and then we'll get to those. So I think from how big do we want the portfolio to be, we don't want it to be too big. I mean, when you look at all of the investments we have, or all the portfolio companies, there are ones that are wholly owned. There are ones that we have material stakes in, and those probably amount to 12. And those are ones that we are diving deeper into. We really see the opportunity to kind of seek alpha on those. The other ones, again, they fit the criteria of being a bit forward-looking. The puck's not there yet, but we think it's going to be there. So we've planted those seeds. And I think for those companies, we'll continue to monitor and sprinkle some water and resources onto them. But I think they'll start to harvest later on in the year. We've got a really, really good core base that we feel can do a couple of things. One, again, improve our balance sheet, allow us to issue share dividends to our share owners. And in each of those businesses, like you've seen as an example of FansUnite, they listed, they conducted 2 really strong M&A transactions, they raised capital, and they were able to grow. And I think as they grow, so does our ownership value. And so with GameOn or Immersive, it's important for us not just to spin them out, get a dividend to our share owners, but to also make sure that they list well, raise additional capital, help them conduct M&A, because we still own a large piece of those businesses. And as they grow in success and hit that unicorn status, that increases and makes our balance sheet more healthy, but also increases our ability to sell and liquidate some of that stake to reinvest, borrow against. It's a those assets are very, very valuable for VST.
Fair to say, Shafin, that you guys are now amassing a war chest that's going to make even more dangerous, because this last 36, 48 months like you've been talking about, you had to do that on more of a shoestring budget. I don't want to say shoestring, but with a lot fewer resources. And you guys have proven to be dangerous. So if you guys have proven to be dangerous, working with limited resources, are you amassing a war chest now that you think 3 years from now makes you guys that much more attractive and dangerous and being able to do what you really want to do?
Hands down. I think if anyone's kind of read some of the CEO letters or listened to some other interviews we've done, we talk about this flywheel effect. And last year was an inflection point, and now the flywheel's in motion. We can self-fund and grow our portfolio. We've delivered, not just from VST or Fans Unite or VSH or GameOn now in Immersive Next, consistently delivered results. We've executed, and now that war chest is growing. Every time a company gets spun out, that war chest grows. But we're still scrappy. So, what might be, $1 million to someone else in theory is like $50 to $60 million to us, just given how the competitive advantages we have and how scrappy we have. So how scrappy we are. And just to kind of reference, for me, I've been in the tech space for over 25 years, but I even though I'm a tech entrepreneur and I've always kind of been at the cutting edge, I think there's a part of me that's a value-based investor inside. And so, I look at guys like Charlie Munger and Manish Pabrai or Bill Miller, Joel Greenblatt, Howard Marks, and these guys, it's all compounding. It's cash flow, compounding, very focused. And I think for VST,
you want those tech upticks, but you don't want to spend like a tech. You don't want to spend like a drunken sailor.
Yeah, we're very, 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 very focused, but we're also very long term. We don't think irrationally. We're not moved by the share price on a day-to-day basis. This is like game theory. Like, it's not. We're focused on long-term success. And again, what we started 36, 48 months ago, the inflection point was last year. The flywheel's in motion. The war chest is being built up, and it'll allow us to, execute even more efficiently and more effectively than we already have. So,
last question. Give everyone, it's fun to talk to someone like you, because whatever you're thinking today is because as you're looking 3 and 4, 5 years down the road. In order to be successful, you have to get ahead of trends. Can you maybe give everyone at home, just for fun, where do you see the world going? What are a couple of trends outside the obvious ones? Are there any non-obvious ones where you say, hey, George, you know what, we really want to be here? Or hey, investors, not just George, but hey, investors, we really think that this is where we want to be 3, 4 years from now, and we're already making investments or looking hard in these spaces.
So for us, a lot of it's obvious because we're so we're immersed in this on a day-to-day basis. But I think anyone that looks at our portfolio, they'll see our focus on virtual and augmented reality, which we're seeing some really amazing things being done in it. They see our presence in the digital health space. So wrote an article, I think it was last year, on second order effects. When we look at digital health space, which for me is very exciting, a lot of what people are looking at is first order stuff like telehealth and things like that. The technology's been around, but we're seeing some amazing software that's picking up data from devices that are monitoring really, really unique pieces of data, from blood glucose levels to different types of things on how your body's operating, taking that data in, looking at what you're eating to deliver, for example, like self-administered glucose delivery. So for us, there's some really amazing things happening in the digital health space from a diagnostic perspective. As we have phones, watches, we're collecting more data on what we're eating. So that's a space that we're seeing that there's going to be some tremendous disruption around the digital health space. with CRISPR therapeutics and DNA sequencing, some really groundbreaking things happening there. I think people are familiar with the circular economy and what's happening with renewable energy. There's one area that, I think a lot of people might not talk about that I'm, personally been bullish on, and I'm going to not ramble too far off on it.
No. We love this because look, we get it. We all get the benefit of just hearing what's in your head for good. You're not rambling. Give it to us. This is great.
Well, you and I have had this conversation about this movement towards Web 3.0. We've had Web 1.0, which was, the first iteration of the internet where you couldn't do much, and then Web 2.0, where you had, these applications like Facebook and Pinterest, and allowed for so much more functionality, allowed you to do a lot more on the net. And we're seeing this movement to Web 3.0, which again allows for the same types of services to be delivered to the masses. But there were a couple of issues with Web 2.0. One was around privacy. So in the case of Facebook, we all as Facebook members input and engage, but we don't own any of that content or copy. And the rules that are set by a central figure who owns everything and dictates how the ecosystem's monetized. And you're seeing these massive movements towards decentralization, which is kind of the underlying, technology behind this. I mean, the average person will still want to, have the same functionality and convenience, but what we're seeing is a massive movement under the hood from an infrastructure perspective to this Web 3.0 decentralized movement. And a lot of people talk about crypto and all of those things. And it's funny, coming from the tech space, a lot of people look at crypto like it's a currency, which cryptocurrency, but for us it's more about the cryptographic cryptography side of things, and how it's integrated into what we see as this movement towards decentralization. And that, to me, I think there's going to be tremendous opportunity. It's massive space, open space in that arena, where we think there's going to be million, billion, if not $1 trillion of value unlocked over the next 5 years. Also, when you look at
5 years, right? I was thinking by the end of the decade, but you're thinking it's going to come a lot faster than someone like me thinks.
I think it will. And the big thing is, when we look at all of the things that we love about technology, well, most of that was built by developers, and developers have built on open source. In this decentralized movement, these developers, the brightest minds, will build on those platforms. Because from a creative expression perspective, they're not confined by central authority telling them what they can and can't do.
Yeah.
But two, and there's also an issue around privacy too. I mean, a lot of people don't realize, there's like 5 super apps, and all of our information is in those 5 super apps, and they own everything, they control everything. So
you think decentralization threatens the existence of Facebook and or Twitter and or Pinterest and or Instagram? Because listen, for those of people who aren't old enough to remember, you and I probably remember, GeoCities and Lycos and then Yahoo, and each one of those was a giant, and then Google came along. So do you think there's a chance that, decentralization actually puts a serious dent? Doesn't have to eliminate them, but puts a serious dent in the likes of Facebook and Twitter and all the big giants that we see today?
So I can only kind of look at my my opinion on the experience of what I've seen over the last 25, 30 years in the technology space. There is always new things that are more innovative, that solve pain points for previous iterations of technology. So what I see happening is the end consumer is going to want a certain set of things, and so my belief is that those things are going to be delivered. And it may not be fully decentralized. There may be like a middle ground that's found. But I do believe companies like Facebook or Twitter, Microsoft, Apple, I think they have a first mover's advantage to be able to to transition to be a significant player. And when you look at it, if you think about it, what it is it doesn't mean they necessarily have to lose their cachet. It just iterates their business model. So as an example, when you talk about decentralization, it's there because the internet is borderless, technology is borderless. We're all connected. So for me, like, I'm not just limited to Vancouver or BC or Canada. I can do things globally to the market. You've seen all these platforms open up how people communicate, connect, buy things, spend, do all these different types of things. And so what it can do is if they transition their business models, the market is massive. It's even bigger from a global perspective. So, I definitely think I don't think it necessarily, a lot of people say it threatens the company, and maybe it does, but I think it just threatens the existing business models. And like in any sort of type of iteration, you need to iterate those models, to get in line with the times. So that's what for me, that's where I see a lot of things happening. And now there's great is coming from everywhere. I think in the past, like all the IP, all the great companies, it really came from the Valley, and it was there because the talent was there, the consumers were in the US, and the funding was all there. But now we're seeing a lot of projects raise funds through issuing early access to their platforms through token generation events. Like one of our companies, Covalent, has been financing within its community. So their community is completely virtual, decentralized around the world. They built an amazing network, but they're not bound by having to be based in the Valley or follow those types of rules. Investment dollars are coming from everywhere, and so I think you're going to see new business models emerge, servicing the services and things that people want, the end consumer wants, but just in a fashion where you have control over your own privacy, on your own data, and you can also participate. When you look at some of the, when you hear about
that's the big one, participate. That for the first time, I think people want platforms to share the success. If I'm on your platform, I want you to share some success, or at least give me a chance to share in some of that success, as opposed to right now it's all hoarded, right? In the bank accounts of 5 of the biggest platforms on the planet.
Yeah, and just as an example to that, we built some IP in house, which was this VPN miner. So allow anyone to download this VPN onto their computer, get access to what would normally cost you $2 to $5 a month for a VPN, but it would mine crypto in the background using some of your unused compute power, and it was powered by software, and it would mine whatever the most efficient coin was at that any given time, and it built out a massive decentralized network. And within that network, while your computer was off or you weren't using it or it was idle, it was making money. You were making money off of it. And so
can we still do that? Can everyone go to VPN? It's a great way to everyone to make a few bucks every night.
Yeah, you make a few bucks every night. But again, it's all about participation, right? If you think about now, like we have personalized computers, iWatches, phones, smart fridges, all these different IoT devices, they're idle for most of the time, right? And so we've thrown around this phase of like, this
unbelievable
Airbnb of storage. And yeah, I mean, there's there's some, not giving too much away, but there's some interesting IP that, that we have, being worked on in a variety of different segments that whether it's creator coins, and you and I have talked about this, creator coins, and which one of our companies, Creator.co, is working on. And so there's so many really interesting things that we think are going to be, to be big. And for investors out there, though, the challenge is finding out where to invest. So sometimes you're stuck within your own geographic region. 2 is, transparency or understanding or being able to monitor your investment. And I think that's why that's why we built VST. It's public. It's trading in Europe, the US, and Canada. It's audited. You're investing alongside the management team, and we're your eyes and ears, boots on the ground, right? We allow you to to have that exposure, and again, you're not stuck in one trick pony. So.
And for 99% of investors, they just don't have the time. Let's face it, for everybody at home, you just don't have the time, right? So leave it to, so you invest in Victory Square, and you ride along with management. And the great thing is, what I think is even better is because Victory Square is public, you can come in and out. If at some time you change your thesis, you're not stuck in a private fund that's closed for 7 years, if you're lucky enough to even get invited into one. But you got to sit there. Whereas Victory Square, you can literally assess where you think the strength of its portfolio on a monthly basis and allocate more or less, go in harder, empty it all out, whatever it is. So I think all the way around, Shafin, what you guys are doing, your vision of the future, and what you're doing for shareholders is truly amazing, my friend. What you guys done is amazing, and we're gonna have you on 10 more times before the end of 20. You get Immersive going public, you got other things happening, so I can't wait to have you back.
No, we're excited, and we're excited to talk to you about Immersive Tech very soon, and Stardust Solar right after that. Yeah.
And you know what? At one point, I think what we got to do for everybody is we'll do a separate presentation where we just kind of go through all your portfolio companies and show people some of the magic of what's possible, the new mind-blowing technologies out there. I think that would be a lot of fun, and B, I think investors would really love the insight.
No, definitely. I think it'll be great.
Thanks for joining us, Shafin, and again to you, the entire team. Congratulations on this amazing. Feat, reporting your record 5th consecutive quarter with positive net income and earnings per share. That's just fantastic. As a shareholder, I thank you and congratulate you, and I'm sure I speak on behalf of everybody.
Thank you, George, and thank you to all our share owners for the support and patience. And we've got a lot of really exciting catalysts to come, so stay tuned.
For everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, or Apple, to Shafin Diamond. He's a CEO of Victory Square Technologies, trades on the CSE under VST. For our friends in the US, VSQTF, and for our friends in Europe on Frankfurt under F6. Do your due diligence, start at Agoracom. You know what to do now. Get to the VST profile, then get over to the Victory Square website. Do a deep dive there. Take a look at some of the portfolio companies, because if you believe that this decade is going to be dominated by disruptive technologies, but you don't have the time or the acumen to really be able to evaluate and report and follow those kind of investments, then Victory Square is definitely got to be one of your options. We can't tell you to do it. You got to make that decision on your own, but don't say we didn't tell you so, because the numbers don't lie. Thanks for joining us. Have a great day, everybody. See you next time.